Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, November 16, 2023. Starting with Japan, equity futures pointed to a soft open. The Nikkei 225 futures contract drifted lower on Thursday morning after the S&P 500 gained 0.2% stateside and the Nasdaq posted a 0.4% advance. Easing inflation data has boosted hopes that the Fed may slow its tightening campaign soon, supporting tech shares. Moving to Australia, the ASX 200 futures also edged down in early trading. However, the underlying index remains up nearly 2% for the week so far amid a risk-on tone. The Aussie dollar gave back some ground after surging 1.7% against the greenback yesterday. In Hong Kong, equity futures rose in early trading, suggesting a higher open. Tech shares may draw interest after Tencent Holdings posted better than expected third-quarter profits. The developer saw revenues climb 1% amid China's strict zero-COVID policies. Shifting to bonds, Treasury yields stepped back after rallying strongly so far this week. The benchmark 10-year yield rose 9 basis points to trade above 4.5%, unwinding some of the nearly 40 basis point drop since last week. Shorter-dated 2-year yields also bounced 4 basis points. The rise in yields overnight helped the dollar regain its footing. The greenback had plunged over the first 2 days of this week as cooler inflation data boosted bets on a Fed pivot. On Wednesday, the dollar index rose 0.5% to bounce from a 3-month low. Gains were broad-based with the dollar advancing nearly 1% against the yen and 0.7% on the euro. Market volatility has also eased this week after the encouraging inflation figures. The VIX fear gauge held near a 2-month low, while the MOVE index tracking Treasury volatility also relaxed lower. The calmer tone comes as markets weigh signs of economic resilience against still elevated price pressures. Retail sales rose 1.3% in October, beating estimates for a 1.0% gain. This suggests consumers still have appetite heading into the holiday season despite high inflation and rising rates. At the same time, producer prices fell more than expected last month on easing energy costs. However, core inflation excluding food and energy remains stubbornly high at 7.2% annually. While the data cemented hopes of a Fed pivot soon, some Wall Street heavyweights cautioned inflation may persist. PIMCO's Dan Ivascyn warned the bond market may be too aggressive in pricing rate cuts next year. Jamie Dimon of JP Morgan also sees ongoing inflation risk. Turning to commodities, oil prices dropped over 1% as a government report showed a large unexpected build in U.S. crude stockpiles last week. This added to concerns over softening global demand. Gold prices held steady above $1,750 an ounce. Finally, Bitcoin bounced around the $37,500 level, struggling to break higher over the past week. The crypto sector remains gripped by turmoil after the FTX collapse. Regulatory scrutiny of the industry has intensified. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Starting with Forex, the US dollar struggled yesterday, posting one of its largest one-day losses this year. The USD index dropped 1.5% amid a fall in Treasury yields and stock market gains after US inflation data showed a cooling in price pressures. The dollar was weakest against the New Zealand dollar, falling 2.32%, while also seeing sizable declines versus the Australian dollar, down 2.22%, and the euro, off 1.67%. Looking at the week so far, the dollar has dropped against all major currencies tracked here. The largest declines have been a 1.99% fall against the British pound, a 2.22% loss versus the Aussie, and a 2.32% slide compared to the Kiwi. The dollar has ceded the most ground compared to commodity-linked currencies as inflation fears ease. In China, better than expected retail sales and industrial production offered some optimism on growth. Sales rose 7.6% annually in October, while output gained 4.6%. Turning to the pound, sterling surged over 2% and broke above 1.2500 against the dollar yesterday for the first time since mid-September. However, gains moderated this morning after UK inflation data showed consumer prices rose 4.6% annually in October, down notably from 6.7% in September. The slower price growth could ease pressure on the Bank of England to continue aggressive rate hikes. Looking at the euro, the shared currency extended its upward push yesterday, breaking above 1.08 and hitting an 11-week high near 1.09 versus the greenback. The euro has held most of these gains so far today, consolidating above 1.0850 amid broad dollar weakness. In Japan, the yen snapped a 6-day rally against the dollar, falling over 1% as Treasury yields stabilized from recent lows. US dollar to Japanese yen regained the 150 level after dipping below 148 on Tuesday. Japanese industrial output picked up slightly in September, rising 0.5% monthly. Turning to equities, Wall Street rallied sharply yesterday as cooler US inflation buoyed stocks. The S&P 500 surged 5.8%, the Dow jumped over 1,200 points, and the Nasdaq powered higher by 7.4%. Stock index futures point to a slightly higher open today as markets assess the outlook for Fed policy. Looking at commodities, gold prices were another beneficiary of declining Treasury yields and dollar weakness yesterday. The precious metal gained nearly 1% to return above $1,970, extending this recovery to around 0.35% so far today. The big question now is whether lower U.S. inflation prints will be enough to alter the Fed's aggressive rate hike path. Markets are betting on a 50 basis point rate increase in December instead of another 75 basis point move. However, Fed officials have stressed the need to keep rates elevated for some time to ensure inflation is well controlled. In summary, dollar weakness and an inflation relief rally have been the key themes so far this week. Markets are hopeful that price pressures are abating, but the Fed may need more convincing before significantly slowing its tightening pace. Commodity-linked currencies and stock markets have welcomed the inflation data, while Treasury yields have declined. Key events this week: China new home prices, Thursday. U.S. initial jobless claims, industrial production, Thursday. Walmart earnings, Thursday. Cleveland Fed President Loretta Mester, New York Fed President John Williams and Fed Vice Chair for Supervision Michael Barr speak, Thursday. Bank of England Deputy Governor Dave Ramsden and ECB President Christine Lagarde speak at event, Thursday. U.S. housing starts, Friday. U.S. Congress faces a midnight deadline to pass a federal spending measure, Friday. ECB President Christine Lagarde speaks, Friday. Chicago Fed President Alston Goolsbee, Boston Fed President Susan Collins and San Francisco Fed President Mary Daly speak, Friday. Watch, Anastasia Amoroso at iCapital talks about markets. Some of the main moves in markets. Stocks. Nikkei 225 futures fell 0.2% as of 7:48 a.m. Tokyo time. Hang Seng futures rose 0.9%. S&P/ASX 200 futures fell 0.1%. Currencies. The Bloomberg Dollar Spot Index rose 0.2%. The euro was unchanged at $1.0848. The Japanese yen was little changed at 151.30 per dollar. The offshore yuan was little changed at 7.2584 per dollar. The Australian dollar was little changed at $0.6508. Cryptocurrencies. Bitcoin rose 0.4% to $37,787.56. Ether rose 0.5% to $2,057.56. Bonds. Australia's 10-year yield advanced 7 basis points to 4.60%. Commodities. Spot gold was little changed. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.